So I found this article about Bitcoin, some of the myths behind it, and I'm going to go over it. So there's some claims, and then there's some counterclaims with some evidence supporting why Bitcoin is a good thing. So first claim is that Bitcoin is too volatile to serve as a store of value. The counterclaim is that Bitcoin's volatility highlights the credibility of its monetary policy. And so here we have this thing, it's called the Impossible Trinity, but basically it has these 3 points: fixed exchange rate, free capital movement, and independent monetary policy. And the way it works is any two sides can work together, but a third side makes the the Trinity collapse. So you could only have two. And so let's take a look. So each side is mutually exclusive to each other. Um, so, for example, fixed exchange rates allows for free flow of capital, but cannot control growth in the supply of money. Likewise, a monetary authority choosing to fix exchange rates and control money cannot accommodate the free flow of capital. So that's kind of the way that works. Here we have volatility versus price returns. So as you can see early on in Bitcoin's life, it had a lot more volatility, and as it matures, it's getting less and less volatile. And here we have a Bitcoin's yearly lowest daily price. So its lowest price in 2015 was 176, and you see as it keeps going up every year, and on average it's gone up over 200% a year since this point. So it's not that much of as risky as people would suggest. So another claim: Bitcoin is in a bubble. The counterclaim is that Bitcoin is a contender for the role of global money. So, saying that Bitcoin's in a bubble, it's basically suggesting that people are putting all their money into this fake thing that has no actual value, and eventually people are going to realize that and take out all their money, and the whole system will collapse. Um, so doesn't seem to be trending in that direction, but essentially what they're saying is it holds no value because like it's digital, it's not real. But paper money has no actual value other than the value we assign to it. So if we assign value to money, we can also assign value to cryptocurrency. And the fact that people are buying it, the fact that people feel that it's currency or money or valuable, means it is valuable. Here we have Bitcoin's market cap compared to gold, and as you can see, it is slowly creeping up on the market cap compared to gold, and it's currently at around 2% that of gold. ARK Investment believes by 2025 it'll be at around 10% the value of gold. Another claim: Bitcoin will lose value to forks and digital copies. The counterclaim: Bitcoin's value cannot be replicated by software alone. So what they're saying is kind of like if you had, let's say, Facebook, and you like cloned Facebook, gave it a different name, and then said you're the new social media platform for everybody to use. Just by having the same software and it looks the same, you don't get all their customers. You don't get things that they've built up within the community over the time they've been around. You don't get their value just by copying their product. And it's the same for Bitcoin. They can fork it all they want. It's not Bitcoin. Another claim is that Bitcoin is used for criminals. The counterclaim is Bitcoin is censorship resistant. So essentially, USD, for example, is used a lot more than cryptocurrency. And if you look at illicit activity, there's also more illicit activity with USD Cash as opposed to cryptocurrency. And in fact, it is better for a criminal to use cash as opposed to cryptocurrency, because although cryptocurrency is somewhat anonymous, there is a record of the transactions when you send money and receive, or when you send crypto and receive crypto, there is a record of those transactions. Whereas if you were doing hand-to-hand cash exchanges, there would be no record of that. So it's actually more beneficial for criminals to use fiat cash as opposed to cryptocurrency. So it might have been used for that at the beginning, but it's not. It's becoming much less of a thing. It's pretty much negligible. And here we have Bitcoin wastes too much energy. Counterclaim is that Bitcoin's energy consumption is more efficient than that of gold and traditional banks. So basically what this is saying is, here we have the consumption of banks is 2.34 billion gigajoules compared to gold 500 million and Bitcoin only 184 million. So by comparison, it is less than 10% and 40% that of traditional banking and gold respectively. So Bitcoin's energy consumption as a store of value is much better than the banking system or that of gold. So yeah, that's it. So in conclusion, Bitcoin, it's complex, but it shouldn't prevent financial institutions from analyzing them in depth. Bitcoin is stirring up a lot of conversation. It's becoming mainstream, and as the network continues to mature, the belief is that it will cement its role in as an emerging monetary asset. So that's it for now. I'll leave this article in the description. So that's it. Take care.